IRS Form 3468, investment credit. So taxpayers will use this tax form to claim the investment credit, which consists of the following tax credits: rehabilitation tax credit, energy tax credit, qualifying advanced coal project, qualifying gasification project, qualifying advanced energy project, and advanced manufacturing investment. So we'll go over each of those in a little bit more detail as we proceed through the form. There are a couple of key concepts. So if you're filing this electronically, but you have to attach additional paperwork, attachments, things of that nature, then you'll need to send in a paper form 8453, which is the individual tax or income tax transmittal document for an e-file return, because you might not be able to submit those attachments electronically. So you'll have to file your income tax return and then paper file the transmittal document with the supporting documentation. So in order to take the investment credit, you have to be able to take that credit against investment credit property, which is any depreciable or amortizable property that qualifies for the rehabilitation credit, energy credit, qualifying advanced coal project credit, qualifying gasification project credit, qualifying advanced energy project credit, or advanced manufacturing investment credit. However, you cannot take a tax credit for any property that is outside the United States unless specifically designated in the Internal Revenue Code. You cannot claim a credit for property that is used by a governmental unit or a foreign person or entity. You cannot claim a credit for property that is used for lodging or in the furnishing of lodging. And you cannot take an investment credit for certain maker's business property to the extent that it was already expensed under Section 179. This credit is also subject to at-risk credit limits, so be sure to pay attention to those limitations if they might apply. And then there are certain conditions where you might have to recapture the investment credit or recalculate it if, one, you dispose of the property before the end of 5 full years after it was placed in service. That is known as the recapture period. 2, if you change the use of the property before the end of the recapture period and it no longer qualifies as investment credit property. 3, if the business use of the property decreases before the end of the recapture period so that it no longer qualifies as investment credit property. 4, any building to which Section 47D applies will no longer be a qualified rehabilitated building when it's placed in service. 5, any property to which Section 48B, 48A, B3, 48B, B3, 48C, B2, 48D, B5, or 48EE applies. Any of those code sections apply, then that property may no longer qualify as investment credit property when placed in service. 6, before the end of the recapture period, if your proportionate interest is reduced by more than a third in an S corporation, partnership, estate, or trust that allocated the cost or basis of the property to you and you claimed a credit for it. 7, if you return leased property on which you claim a credit to the lessor before the end of the recapture period. 8, a net increase in the amount of non-qualified, non-recourse financing occurs. 9, if there's a certain grant under Section 1603 of the American Recovery and Reinvestment Act, for which a credit was allowed for progress expenditures before the grant was made. And finally, there are a couple of other recapture provisions in the form instructions that are a little bit less common. So to that extent, you may need to, if you are a shareholder or a partner or a beneficiary in a pass-through entity, then the entity may provide you the information to complete these lines in your respective documents. So let's go through this investment credit form with our hero, John Doe. So in part one, we would complete this if we were claiming the investment credit as a lessee. So then we would we'll pretend that John Doe is leasing his equipment. From Joe Smith Enterprises. In line 3, we would simply enter the description of the property. And then we just put a dollar amount down, right? This is the amount that we decided that we were considered to have acquired the property. And this would be the number that we would use for calculating the credit. So $50,000. In this case, we put the description of the property as the first project, right? Qualifying advanced coal project credit. Odds are very likely that you're not going to complete every single one of these lines. So there's gasification, there's the manufacturing investment credit, and then in part 3 we have the rehabilitation and the energy credits that we'll calculate. There's also qualified fuel cell property, qualified microturbine property, combined heat and power system, qualified small wind, waste energy recovery, geothermal heat pump, qualified investment credit facility property, and then other energy credits and special adjustments. So it's highly unlikely that you're going to use all of these, but we will walk through each of these in step-by-step order. So starting with a qualifying advanced coal project credit. So a qualifying advanced coal project is one that uses advanced coal-based generation technology as defined in section 48AF to power a new electric generation unit or to refit or repower an existing generator. If it has fuel input that when completed will at least be 75% coal. It also has an electric generation unit or units that will generate at least 400 megawatts. The majority of the output that is reasonably expected to be acquired or utilized. It's constructed and operated on a long-term basis when the taxpayer provides evidence of ownership or control of a site. It's physically located in the United States, and it includes equipment that separates and sequesters at least 65% of the total carbon dioxide emissions for project applications. 70% in the case of an application for reallocated credits. So the portion that is, so there are 3 different items here. Qualified investment in integrated gasification, combined cycle property placed into service. That's subject to a 20% credit of your expenditures. Qualified investment in advanced coal-based generation technology placed in service during the tax year under section 48A D3B2. And then that's subject to a 15% credit. And then property that was placed into service as described in section 48A D3 B3. So in line 5A, you'll enter the money that you invested in eligible property, which is defined as any property part of a qualifying advanced coal project using integrated gasification combined cycle and is necessary for the gasification of coal. So any equipment that converts coal to synthetic gas that is then used to turn a turbine. So let's just imagine we spent $10,000 on such equipment. You would multiply that and you would get $2,000. In line 5B, the eligible property here under this code section is any property that is part of a qualifying coal project not using an integrated gasification combined cycle. So let's just say we spent $20,000 on this equipment, to which we're eligible for a 15% credit. And then in line 5C, this is eligible property. It's any certified property located in the United States and is part of a qualifying advanced coal project that sequesters and separates at least 65% of the total carbon dioxide emissions. So let's just say that we spent $20,000 on this, and that gives us a $6,000 credit. We'll simply add those lines and we come up with an $11,000 credit. Okay. In line 6, now we're talking about qualifying gasification or advanced energy project credits. So a qualifying gasification project is one that employs gasification technology as defined by section 48B C2. It's carried out by an eligible entity, and it includes a qualified investment not to exceed $650 million that's certified as eligible. So the total amount of credits that may be allocated cannot exceed $600 million. So again, we're going to, in line 6A, enter the amount that we invested in qualified property placed into service during the tax year. This includes equipment that separates and sequesters at least 75% of the project's carbon dioxide emissions. So if it does that function, you can take a 30% credit. If there's qualified investment property other than whatever qualifies under 6A, then it's eligible for a 20% tax credit. So let's just assume that we spend $100,000 on in each category. So that means we'll take a $30,000 credit up here, and we'll take a $20,000 credit on 6B, and then we'll add those together, and we get a $50,000 tax credit. So in line 7, now we're going to calculate the advanced manufacturing investment credit, which is equal to 25% of the qualified investment in any advanced manufacturing facility for an eligible taxpayer for the year. So qualified property includes any building or structural components, and then all of the following: any tangible property, any property that's allowed depreciation or amortization. For example, land is not depreciable, so it would not be qualified property. Property that is constructed, reconstructed, or erected by the taxpayer or acquired by the taxpayer if the original use of the property starts with that taxpayer, or then property that is integral to the operation of an advanced manufacturing facility. So an advanced manufacturing facility is one whose primary purpose is the manufacturing of semiconductors or semiconductor manufacturing equipment. So let's just say we spent $1 million on this facility. We would be able to take a $250,000 tax credit in the given year, right? In line 8, we won't use that because the IRS has set that aside for future use. Any unused investment credit from cooperatives would go into line 9. So if you are a co-op, then you would have to refer to the instructions for IRS Form 3800, the general business credit, to allocate investment credit to your patrons. But if you are a patron of a co-op and you've received any unused investment credits, you would enter them in line 9. And then you'll total the amounts from 5D, 6C, line 7, and line 9. So we get 300,000, 311,000. We would enter this on IRS Form 3800, Part 3, line 1A. If you entered an amount here, then we also have to make an adjustment. So if you elected to treat the amount of credit on line 7 as a deemed payment under Code Section 48D, then you would have to back out that amount as a deemed payment on line 1A of your IRS Form 3800, Part 3. So that line plus line 10 might not match if you elected part of this credit as a deemed payment. Now we're going to go into Part 3, which consists of the rehabilitation credit, the energy credit, and then the qualified fuel cell credit, and some other credits. So you're allowed a tax credit for qualified rehabilitation expenditures for any qualified rehabilitated building. You have to reduce your basis by the amount of the tax credit as determined for the tax year. And a qualified rehabilitated building must meet 5 requirements. It must be a certified historic structure. It must be substantially rehabilitated. The depreciable must be allowable with respect to the building, which isn't allowable if it's permanently retired from service. 4, it must have been placed in service before the beginning of the rehabilitation project. And then there are certain, if it's a building under the transition rule, then at least 75% of the external walls must be retained, with 50% or more kept as external walls, and then at least 75% of the existing internal structure or framework must be retained. And then there are certain qualified rehabilitation expenditures. So they must be for either non-residential real property, residential rental property, or real property that has a class life of more than 12.5 years. Those expenditures must also be incurred in connection with the rehabilitation of a qualified building. They must be capitalized and depreciated using straight line depreciation. They cannot include the costs of acquisition or enlarging any building. The rehabilitation must be certified by the Secretary of the Interior as being consistent with historic character of the property. And then the expenditures cannot include any costs allocable to the part of the property that is tax exempt. So a lot of restrictions when it comes to the rehabilitation credit. It's by design. You're supposed to take this credit when you're restoring certain desirable buildings and making sure that they're consistent with their historical use. So We're going to go through line 11, and so you can check the box in line A, 11A, if you're electing under code section 47D5 to take your qualified rehab expenditures into account for the tax year in which you paid for them. So in order to do this, the normal rehabilitation period for the building should be at least 2 years, and it should be reasonable to expect that the building will be a qualified rehabilitated building when placed in service. So if you want to take this credit in the year that it was incurred or that you paid the expenses, even if the building's not in service, you can make that. But if you make that election in this year, then you can't go back and deselect that in future years because then you would be running the risk of taking the same credit twice for the same expenses. So you can't do that. Once you make this election, you cannot revoke it without IRS consent. So you'll enter the dates on which either the 24 or the 60-month measuring period begins. So let's just say that we started this project on, and we're gonna so it's a 24-month project. We're going to enter the adjusted basis as of the beginning date. We can enter the amount of qualified rehabilitation expenditures. Let's just say it was $50,000. Under line 11E, we'll break out pre-1936 buildings under the transition rule. In line 11F, certain historic structures under the transition rule. 11G, certain historic structures after 2017 not into the transition rule. So those tell us like which tax credits will be eligible for. So it could be 10% of costs, 20% for certain or for certified historic buildings, and then certified historic structures after 2017 not subject to the transition rule would be 4%. So we'll say that we spent $100,000 on a project after 2017. That means our tax credit would be $4,000. This credit is allowed for a 5-year period beginning in the year that the building is placed in service. So if you identified a property either on 11F or 11G, then you would enter the National Park Service project number and the date that they approved the request. So for example, now moving on to the energy credit. The energy credit is the energy percentage of the basis for each energy property placed into service during the tax year. They can include geothermal, solar energy, qualified fuel cell properties, qualified micro turbine properties, combined heat and power system properties, qualified small wind energy properties, waste energy recovery property, geothermal heat pump system property, energy storage technology property, qualified biogas property, or microgrid controllers property. So to qualify as energy property, regardless of the characteristics, it must meet performance and quality standards as promulgated by Department of Energy. Must be property for which depreciation or amortization is allowable, and has to be property that either the taxpayer built, rebuilt, or put up, or it was acquired by the taxpayer who put it into use, original use. So we're going to start with line 12A. We're going to put in the basis of property that uses geothermal energy placed into service during the tax year. So exactly what it says, geothermal energy property is equipment that uses geothermal energy to produce, distribute, or use energy derived from a geothermal deposit. Equipment qualifies only up to, but not including, the electrical transmission stage. So if you have a geothermal heat pump, you can take the tax credit for everything that went into the heat pump, but not anything that transfers power away from the heat pump. So let's just say we put a $100,000 pump in. You can take a 30% credit in the year that we put it into service. For line 12B, this is for solar property, and solar energy property is property that has equipment that uses solar energy to illuminate the inside of a structure. It could be electrochromic glass that uses electricity to change light transmission properties to heat or cool a structure, or it uses solar energies to generate electricity, heat or cool water, for example, in a structure, or provide solar process heat, as long as it's not to heat a swimming pool. So any of such property that was placed into service after 2005, as long as the construction either began before 2020 or after 2021. So we'll just say we spent the same amount here, and we get the same amount of a tax credit, $30,000. So in line 12C, this is the solar illumination or solar energy property, again, that was placed into service during the tax year. For simplicity's sake, we're going to use $100,000 investments for each of these line items as applicable, unless we need to point out a different unit of measurement. So in 12E, this is qualified fuel cell property, which is a fuel cell power plant that has a nameplate capacity of at least 0.5 kilowatts, or 1 full kilowatt in the case of a fuel cell plant with a linear generator assembly. Has to use an electrochemical or electromechanical process, and has electricity only generation efficiency greater than 30%. So to recap that, it generates at least 0.5 kilowatts unless it's got a linear generator assembly. Then it must generate 1 full kilowatt, and it has to be at greater than 30% efficiency. So this was property that was placed in service during the tax year, acquired after 2005, but before 2008, October 4th, 2008 specifically. And then in 12F, you would enter the applicable kilowatt capacity. So this must be a whole number. You can't put like 0.5, you would have to put 1. So we'll skip this, but you would just fill it out as such. Let's just say 5 kilowatts. You would put 5,000 over here, right? And then based on the size of the kilowatt, or based on the, either the kilowatt output or the percentage, you would take the smaller of the two and that's your applicable tax credit. So we're going to back out of this because I don't think realistically I can see a situation where we would have qualified fuel cell property that we bought almost 20 years ago but put into service over 15 years ago that we're still taking a tax credit on. So in line 12H, again, this was the basis of property placed in service during the tax year attributable to periods after October 3rd, 2008, and the construction began before 2020 or after 2021. So let's take that scenario we just described up here and let's put it down here. So now we spent $10,000 on this, or 100,000, sorry. So that's a $30,000 number. The 5 kilowatts comes out to $15,000. Now we can take the lesser of those two tax credits, which would be the $15,000. That's what we'll put here. And then the basis of any property that was placed into service during the tax year, but the construction began in 2020 or 2021, we would do the same thing here. So all right, we won't use lines 12N, 12O, or 12P. We'll move on to qualified microturbine property. And again, this qualified microturbine property has an IRS definition. Specifically, it is a stationary microturbine power plant that has a capacity of less than 2,000 kilowatts and has an electricity only generation efficiency of at least 26%. So let's just say that we spent $100,000 on this and it generates 10 kilowatts, right? So we're either taking a $10,000 tax credit or a $2,000 tax credit. So you can guess which one we're going to take. We're going to take the smaller of the two. And then we're going to move down to the combined heat and power system property, which you can't claim this credit if the electrical capacity of the property is more than 50 megawatts, or if it has a mechanical energy capacity of more than 67,000 horsepower, or an equivalent combination of electrical and mechanical energy capabilities. So a combined heat and power system property simply means that it uses the same energy source for both for the simultaneous or sequential generation of electrical power, mechanical shaft power, or both. It determines an energy efficiency percentage on a BTU basis, and it has a energy efficiency percentage over 60%, and it produces at least 20% of useful energy as thermal energy, and 20% of its total useful energy in the form of electrical or mechanical power. So you cannot take a tax credit for both the combined heat and power system property and waste energy recovery property for the same piece of property. So in this example, we'll pretend that this example that we're using here for line 12S through 12V is going to be different from the property we place into service under 12BB. Okay, so we'll put $100,000 here, which is $10,000 over here after the calculation. And then we're going to just say that we have, I don't know, 60,000 horsepower. So divide, or sorry, 5,000 horsepower. So then we'll multiply. So the number in 12U cannot enter, or it cannot exceed 1. So If you're using megawatts, you would divide 15 by the megawatt capacity. So if you have a property that's 30 megawatts, then you would put in 0.5. If this property was placed into service after 2022, multiply by 30%. If we're in tax year 2023, then we'll put in that 30%. So for this example, we'll just say that our capacity is 15 megawatts, which means that we have 1 on 12U, and then we're going to just carry the $30,000 credit down here. For 12W, we're going to calculate the qualified small wind energy property. So 12W, this is property placed into service, acquired after October 3rd, 2008 and before 2009. So that's not going to be applicable to us. So we're going to continue down past that. And now we're entering the basis of property placed into service during the tax year after 2008, the construction of which began before 2020 or after 2021. So we'll use this one to document our $100,000 investment, for which we get a $30,000 tax credit. And then line 12Z is for the basis of property placed into service during the tax year, but the construction began in either 2020 or 2021. So we don't use line 12AA, we would use 12BB if we had $100,000 of waste energy recovery property. And remember that this has to be a distinctly different property than the combined heat and power system property. So make sure that you're using the correct one for each tax credit. Geothermal heat pump systems. This is equipment that uses the ground or groundwater as a thermal energy source to either heat a structure or as a thermal energy sink to cool a structure. So you'll enter the basis. And again, for property placed into service after 2022, you get to use 30% instead of 10%. So we're going to enter the $30,000 here. And then we have qualified investment credit facility property. This is property that is tangible personal property or other tangible property. It's constructed, reconstructed, erected, or acquired by the taxpayer. It's depreciable or amortization is allowable, and the original use begins with the taxpayer. In other words, the taxpayer claiming the credit is the first one to use the property. And the qualified investment facility is one of the following. It can be a wind facility, closed loop biomass facility, open loop biomass facility, geothermal or solar energy facility, landfill gas facility, trash facility, qualified hydropower facility, marine and hydrokinetic renewable energy facility, or a qualified offshore wind facility. It also has to have not had a credit allowed for that property before, and you have to make an irrevocable election to treat this facility as energy property. Now under 12HH, any additional adjustments, you can make adjustments based on the form instructions for energy storage technology, modifications of certain property, thermal energy storage property, qualified biogas property, microgrid controller. So if any of those are applicable, then the form instructions contain a little bit more detail on how to calculate those extra energy credits and special adjustments. In line 13, you'll enter any unused investment credit from cooperatives. So just like we did this up here in part 2, the unused investment credit from cooperatives, we're going to do the same thing down here in line 13. The unused investment credit from cooperatives would go down here. And one last thought. If you have any other energy credits, there is a line 12HH worksheet for all of the different types of properties that I just listed. And there's quite a few. So if there's property that you're interested in taking a credit for that wasn't a part of this video, the form instructions contain a worksheet that might find the exact property that you're looking for, and then you'll be able to calculate the tax credit on that worksheet. So if you're a patron of a cooperative, you're going to receive this investment credit as a pass-through. So we'll just put down $10,000, and then line 14, we're going to enter the total of all of these tax credits. So that's 100,000, 162, 92. 282, 26. And then you would put this on Form 3800, Part 3, Line 4A. This is a different line than what you're reporting on IRS Form 3800 for these previous the qualifying advanced coal project credit. All of these credits in Part 2 go on a different line on the general business credit form. So that's why they're in different sections, because there are different rules that might apply. All of this kind of works its way through in the tax return on those forms. So pay close attention and the calculations will work themselves out. So that's all we have for this tax form. We have broken this down into more detail in our article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 3468 in the search bar, and you'll see our article. If you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. And if you have any questions or comments, please put them in the comment section. Thank you very much and have a great day.